Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, October 7th. I think that in order to look at what we're dealing with in the marketplace at the present time and what we're expecting, I think we've got to look at it from a couple of different perspectives. They're going to sound a little bit contradictory, but I don't think they really are. They're both trying to tell the same story, but just viewing it from different ways. In many respects, we're looking for seasonal bottoms. And I think we're looking for seasonal bottoms, wheat, corn, and soybeans, all of them. In some respects, we got into the price level necessary for seasonal bottoms in all of those markets during the last 2 weeks of trade. In the case of wheat, we only spent 1 day down there and then quickly went back up to the same trading range that we were in. In the case of soybeans, we got pretty deep into the downside targets for that break, and the liquidation activity was pretty thorough, and it certainly gave the impression that we might have seasonal bottoms in, and maybe we do, but my suspicion is that we have not fully defined these seasonal lows yet, and I think that at least in some of the deferred cases like July of 2013, I think we're going to make new lows. I think we're probably going to make new lows in the nearby months, but I don't think the process is quite complete yet. In the case of corn, that too, we also got deep into the downside targets, and the liquidation activity was very thorough. Certainly gave the hint, especially after we got a bullish stocks report and sharp price run-up, that we were done with the seasonal low process, that we'd established that seasonal low. And it's very possible we do have that low tick in. But as I mentioned at the time, just because you achieve a price area for a seasonal low doesn't mean that you can't spend some time testing that area out or possibly jabbing that area out. But overall, the process is still very mature in trying to reach that point where the ultimate seasonal low is in. In the case of where prices are at right now, corn is settled at $7.48 on Friday. That's 43 cents above the price low that we've seen so far. Soybeans are about 47 cents above the price low that we've seen so far at Friday's finish, and December wheat is only about 8 cents above the price low that we've seen so far. So there's a fair amount of room here between the recent lows and where we finished Friday, and if indeed we do have another test or a probe of those lows to occur, that's a fair amount of weakness right now, and that type of weakness I don't think is expected by too many people. So on the one hand, we are definitely looking for seasonal lows, but we are far enough off our recent lows that to make the comment that we might test or jab those lows sounds like a lot of weakness. But I think that's all part of a process to define the seasonal lows. As far as tonight is concerned, from a weather perspective, I don't see anything very significant to influence markets. The Midwest harvest should proceed pretty well, at least this week. We start to get a weather pattern developing in some areas from after this week, but harvest is moving along very rapidly, and I don't think there's any storyline there to talk about as far as delaying harvest. Any moisture that we get in the Midwest in virtually all areas is going to be very welcome, and whatever it delays harvest, I think people would be willing to sacrifice some convenience to build soil moisture, rebuild some soil moisture. So I just don't see any storyline here regarding weather in the U.S. Midwest. As far as the plains concerned, there's certainly areas that would like to see more rain in the hard red winter wheat area, especially northwestern areas. There's some signs of improved moisture coming, but even in the forecasts that have a wetter slant to it, still leave some areas in the northwestern part of that belt drier than desired. Marketplace and traders have tried to create a storyline, a bullish storyline on both U.S. dry weather in the plains and Australian dry weather, and I think there's been certain periods of time for a day or a part of a day that the market attempts to attach that storyline to some upward tick in the marketplace, but I don't think there's been any direct sustained multi-day correlation between weather forecast concerns for either of those two regions and market direction on a day-to-day basis. So I don't think there's a storyline there. The forecast has parts of Australia seeing improved moisture here this week, with maybe the areas that don't get it this week in the western part to have better chances next week. Some areas in the plains will get rains, like I said, but other areas will miss out. But I don't think there's a serious storyline there. Technical conditions in wheat warn of more downside risk. Could be a fairly decent sell-off here in wheat below the recent lows and spend a little time down there. But I don't think you're talking about developing a trending lower downtrend pattern here in wheat. I think you're just talking about still in the process of trying to find a seasonal bottom. In the case of corn, like I said earlier, maybe we already have that seasonal bottom in, but if you look at the price action in corn this past week, it was not very good. We were not able to build upon the initial post-report reactions from that stocks report. It is true that we had some larger private estimates in yields. There's a lot of debate still about corn yields and where that final number is going to be. But there's a lot of people that got excited about buying corn after the stocks report, knowing that we were looking for some sort of seasonal bottom. But the price action did not follow through well last week. And I think you've got to run a situation here where a lot of the recent post-report, post-stocks report buyers could easily be chased out of this marketplace. And I think that we are vulnerable to doing just that. This Thursday, USDA weighs in with their latest production estimates. I think that, like I said, the trade ideas are very mixed about that. Some people are willing to, let's put it this way, there are more people now willing to concede some sort of better yield than what we had at our worst points, but there are others that are not so anxious to concede that. I think the risk here to the corn market is that USDA comes in with the forecast here on production that makes people feel that maybe even later reports might be increased again. I think there's also a risk that even though the stocks report was less than expected and seen as bullish, when USDA is done tweaking their supply and demand, it may not look as bullish as what they thought. So I think the corn market runs a risk here of still having to deal with disappointing USDA data in terms of disappointing to the bulls. I think we have price action that technical conditions warn it has more time to spend down here defining that seasonal bottom, and whether that's a test or a probe of recent lows, I'm not sure, but it's certainly a possibility. So it looks like the corn market has reasons to find a seasonal bottom. We have plenty of fundamental reasons to believe we're going to see higher prices during the winter from this low. It's just a matter of trying to define that low, which I'm not sure we're done with that process yet. As far as soybeans are concerned, price action there has not been very good. Market is dealing with higher U.S. national yield projections. Whether or not we've ratcheted those up too high in relationship to how fast USDA will come along, I'm not sure. But price action there is concerning, and it looks like we're going to make another test of the recent lows or a probe of those recent lows. And from where we close, that suggests that you got roughly 50 cents of downside risk, maybe a little more than that. South American weather. People are anxious to get a weather market started there. Number one on the calendar, it's really too early to start a weather market down there. Number two, the areas of greatest focus for the bulls would probably be northern Brazil and saying it's too dry. And in today's 2-week outlook there's some chances for improved moisture there. I just don't think there's a storyline there. The market's tried to talk about it for probably a month, trying to create some storyline there, but I don't think there's been any real connection between price action and South American storylines, and I don't think there's going to be one here for a little while either. Short-term technical conditions warn of some downside vulnerability. Overall conditions warn of trying to find a seasonal bottom. So I think that this week's price action is going to be geared off of anticipating Thursday's USDA reports. I think small bounces from Friday's price levels probably find some selling interest. I think the buyers are more inclined to wait until after Thursday's USDA report, and all of that might spell some weakening of price trends here this week in front of Thursday's U.S. report. I think when you take a step back view, all of these markets, if they put in a decent, a notable price break, we get some bearish reports, for instance, we go down and test or probe the recent lows, I think that you ignore whatever bearish height might be coming with that probe to those downside, and you anticipate that we're still on a process, involved in a process of trying to find and define a seasonal bottom. The liquidation pressure should pretty much all be over, but have been over for several days probably, and any further probes down now, even if we get some bearish numbers from USDA on Thursday, they're going to lack any ability to develop, multi-day, multi-week trending lower type of scenario. South American weather is going to be very important over the next few months, and the odds are high that we're going to get some sort of a weather scare there. Once this seasonal bottom is established in beans, if you're looking at like July 2013, that seasonal bottom might be 50 cents, 40, 50 cents below where it is right now, which is going to put that market down at the around $14 or maybe a little bit less. From that type of area, it wouldn't take too much of a weather concern in South America to say you could easily justify having $3 of upside potential there. So I think the opportunity here is to look for seasonal bottoms, look for longer-term buying opportunities, but just be respectful of the potential that before we define the absolute last low for the seasonal bottom, the downside risk from where we finished from Friday is still, somewhat noteworthy. So for the DPP grain desk, this has been Duane Lowry.